Happy Monday to you on this March 23rd. We welcome all of you here. Hopefully you had a good weekend and we're right back at it. My name is James Boyd. Alongside with me, Rachel Dashel in the chat. We welcome her and all of you. We got with us Thea, Will with us. We got JDHZZZ, Dean with us, Bill Barnhoff, BJ, Chena Favors, and many others. Welcome to all. Now remember, Rachel and myself, we do post educational content on X. Join us there. There's my handle. Rachel will post hers in the chat. That way you can click on it and just follow her as well. Now, just a quick reminder that we stream our sessions live, as you know, right on YouTube. And you could actually also subscribe for free. Okay, that way you can see all our videos. You don't have to be sitting on a computer. You could be on an iPad, iPhone, whatever, just right on YouTube. Quick also reminder that I'll send that link out. That way, if you have not subscribed, quick win. Just put it, click on that. Will be right there in the middle of the page. Okay, for some of you that don't know that, get used to that functionality. There's also a search feature right there. Make sure you're aware of that. That's the big advantage of subscribing. You can search through some of the content of previous classes that we've done. Quick reminder that the playlist for this class. Think of this like you like to watch a certain TV show and you're going back and watching certain episodes. Well, that's what this is. So you're going to see the topics over the last couple of weeks that we've discussed. Now, just real quick as we hop right in, remember that with what we discussed, the information I talk about is done for general informational purposes only. It's not a individualized recommendation. They're educational examples. Also remember that when we talk about the paid money software application, that's done for educational purposes only. When we talk about investing involves risk, including loss of principal. So this is very important. When we have a market that has sold off, it doesn't necessarily mean that the portfolio just goes up over time, okay? Someone could invest in fixed income and be down if rates go up, okay? So when you invest in different types of products, especially equities, etc., they can have a drawdown, okay? Can have a different amount of drawdown depending upon how you postured that portfolio. Now, just real quick as we get going here, I want to talk about some of the, we're going to focus here today on kind of oversold indicators. We're going to focus a little bit more on the RSI and the stochastics. Now, first off, just real quick as we get started here, I want to pull up just real quick this chart. Now, you might say, well, why would you bring up this ticker? The reason I'm bringing up this ticker is I want us to see the overnight action. So if we brought up, let's say, example given the DJX for the Dow Jones, we're not going to see the overnight action. Now, if we take a look at, let's say, example given the overnight action, Dow futures actually got down to 45,421. We're not trading the futures, but we're looking at the price swings, okay? And you're going to see that we got to the height of 47,204. So kind of been a trampoline style day. Rachel and I were up 5:30 this morning, my time, 7:30 hers. But the biggest actually thing is when you look at this, you know, there was one post, we talked about this, one post that came out, which maybe wasn't even true, maybe, okay? And the market bounces. You got to remember, a lot of people, they've been maybe playing bearish, and when those posts come out, potentially, if they are true, people become a little nervous as they're sitting on maybe potential profits from bearish positions, and they say, hey, maybe I want to get out of that bearish position. Maybe the bulls are going to start to come back in. Speaking of actually the Dow Jones itself, if we pull up the Dow Jones, let's pull up DJX. Let's look and see what it looks like. And if we pull this up, kind of the reason why I want to kind of talk about the MACD, stochastics, and RSI, and we'll look at them different time frames. When things actually fall down, right? We normally fall down to horizontal support levels, especially if the sell-off has been quite severe. When I think of like more of a severe pullback, like a good one, I'm thinking 8 to 10% off the top, okay? Obviously, if we're talking about bear market from the top, 20%. Not talking about that. 8 or 10% off the top. If we actually go back and look at this, now we're falling back into that zone of, let's say, 456 and widening out this neutralist range in the market. Remember what we said. We're in a stock picking market. We don't have the indexes that are back here that are going to the upside, dragging other things with it, other stocks. This is more stock picking, which stocks might outperform the index and or the sector. So when you look at, let's say, the MACD on the bottom, which we're using a 613.9, we're kind of seeing that same type of pattern, right? Where the MACD was low, then it was low, but not as low, and the MACD was low, but it's not as low. So as the selling pressure actually is, as we're selling off, the thrust of that actually selling pressure is not as severe. Yes, we are actually hitting fresh new lows, for sure. But it's not necessarily causing the momentum of that selling pressure is not getting worse. Okay. Now, super quick, if we look at, let's say, the SPX, do we see that same thing? Not as much. It's really more on the Dow. Now, I would say this: if you look at the Dow, we're talking about large cap stocks that are actually correlated to the U.S. dollar. Okay, we'll come to that in just a sec. The U.S. dollar, if you look at the U.S. dollar compared to other countries' currencies, you're seeing that U.S. dollar maybe starting to show signs of weakening, okay? And if you look at the S&P, we don't see that same type of divergence there. If we look at the NASDAQ just real quick, do we see that? No. On the NASDAQ, we do not see that. We actually saw a fresh low on Friday, and that MACD was even lower. Boo, okay? Many investors don't like to see that. Now, let's talk about those 4 charts, okay? So number one, the 4 charts we've been watching, okay, systematically is actually looking at the VIX. Now remember, think of it, we're all on the shore at the beach, okay? And this is showing the height of the waves each day. Well, what you're going to notice is here, the height of the waves, they've been pretty high, okay? 30 footers to be exact. And if we take a look at this, when the VIX is high, things price-wise are low, and there's more choppiness in the market. That choppiness in the market, or where the VIX is, could influence the strategies that you pick. If you trade options, if you do use stocks, you actually, for example, might say, look, I'm going to do maybe some dollar cost averaging because the chances that I'm going to get in at the bottom are pretty low, okay? We've talked about that, building a position. Now, if you look at the VIX, name the last time we went from 20 to 30 in one day. As my good friend says, buckle up, buttercup. Okay, when that VIX swings or swings like that, there's been some pretty good moves. Okay, now, so obviously the VIX is high. Okay, now the other chart we want to take a look at. Now you can just pull it up yourself. I won't pull it up. But pull up Brent oil, or let's say crude oil itself. Again, want to see that chart going down. These are the 4 things that we had against us. They were in our faces, right? The one thing I do want to bring up, let's say, so we said the first thing was actually the VIX. Second thing was crude oil. Third actually thing is the U.S. dollar. Remember, we need these to go down. You're probably not going to get that dadgum bottom if these are still grinding to the upside. That's probably the truth, okay? Now, I know bulls hate to hear that, but you got to tell yourself the truth, okay? And the last chart here is really looking at interest rates. Now, I think probably the most interesting thing is if you look at the TNX CGI, you might say, what does this have to do with anything? The answer is a whole heck of a lot. When you actually think about valuation, borrowing costs, everything like that, if this chart is going up, this is a 10-year maturity, this is showing 4.36. If this chart's going up, it's pushing down valuation on stocks, which probably means lower potential prices. And if you borrow money from as a consumer or a business or governments, etc., the cost is going up. Okay. Now, I want to kind of say this one point. We're going to go to our first example. When you kind of think of what's been happening abroad, right? The longer that actually goes, you could almost push, let's say, the U.S. and other countries into a recession, which actually maybe leads to lower potential tax receipts, which leads to higher deficits, which actually then leads to maybe higher borrowing. Higher borrowing of actually those governments actually maybe leads to potentially higher interest rates. Man, God, none of that sounded good. So the biggest thing is, I think I think you're kind of in a situation where this window of what's been happening abroad could be closing, okay? Because the longer you have that, the greater chance that you run these countries into the shore of recession, Okay, I said that R word. Okay, it's not a bad 4-letter word. Okay, but the biggest thing is what we're seeing is these bond investors, they're saying, hey, we're planning that you're probably going to be run deficits and you're going to borrow, and if you do borrow, you're going to have to pay more money. Now, how does that affect stock investors? Well, if you did any type of valuation at all, higher interest rates, lower values. Okay, same thing with real estate. Hey, if I actually borrow, if I have a house at 8%, what's the value of the house now? Well, the higher the rate, the lower I want to pay for it. It's the same idea. Now, let's take a look at some of these examples, okay? Now, I want to go to just real quick a couple sectors. Just want to fast fire, okay? Now, we know that when you take a look at, let's say, crude oil swung quite a bit today. We know that it's the transportation area is not just what crude oil is doing. There's been some other things like, getting through the checkpoints, things like that. But I want to go through some stocks because I think there could be a theme. Now, when you look at the transportation stocks, of course, that's factored that in, okay? And when we look at that, could that be getting a little reversal? We'll come to that in just a sec. Just want to throw these out here. When you look at, let's say, the industrials, I'm not sure if we'd say that's really turning yet. Is there a slight divergence on that? Maybe, okay? But it's probably more like Dow-like when we looked at that. When we look at basic materials, I don't know if you saw overnight, but those precious metals were not precious. Those precious metals were just metals, okay? It was like going to a scrap yard last night if you actually stayed up a little later last night. It was pretty amazing. Now, if you also take a look at, let's say, IXR, the staples, that's another area that can have an inverse, somewhat relationship to rates. And if you look at that on the bottom, kind of the same thing there. And if you look at, obviously, energy, don't need to say a whole lot there, fighting back to the upside. Now, there are a couple that we might think, well, geez, everything in energy has already gone up. You missed the boat. I don't know. There's actually some things that are actually still kind of pushing, okay? So those are kind of some of the sectors I want to bring up. But let's kind of talk about some of these examples. Now, first off, I want to go back to Dell for just a moment, okay? I don't have any new position, but I had to attend there was a funeral last week for my family. It was an unplanned funeral. Most funerals are unplanned. Okay, thank heavens. So, but I want you to know that some investors are watching Dell. And if you take a look at Dell, that's one that's kind of went up to a brand new high on Friday. We do have that stock position still. What is that position? Let's go back and look at that. Just briefly, what is it? Let's see what it is in. Dell shares of stock, okay? And I also think there's a short put. Now, on that short put, what I'm going to do is, so we got the shares there, and we got the short put there. 25 days left. Okay, so the 25 days left, sold it for $645. It's at $297. If we got, let's say, half of that premium, we'd be like what is that? What's half of $645? $325. Okay, so if we're below $325-ish, which we are, that's 50%. Okay, when was this sold? Sold about 10 days-ish ago. Now, what I'm going to do in this example, I changed my mind because that percentage is higher. If we actually say, look, that's a good percentage, especially for the first 10 trading days, I'm going to roll the option. Now, this language, just roll. Look, let's just say we want to renew. We want to renew, okay? Now, remember, when you renew it, you're saying that it's like almost like saying to me and my wife, all right, we're going to renew our vows. Why do we want to do that? Well, because we're madly in love with each other. We think that trend has been up, and we want that trend to continue. Makes complete sense. Now, if we take a look at this, we're going to right-click on this. Now, remember, when you renew that, what is it really going to do in this case is it's going to reset the position. We're going to get out of what we have, and then what we're going to do is say create a rolling order, okay? You could call it rolling. We're going to call it renew, okay? We're establishing a new position, profit taking on the position that is there. And then what we're now going to do is you're going to see something that says calendar. It's assuming that you would actually pick the exact same expiration you have. You don't have to. So trade number one that we're going to do here is, now, by the way, let's go back to this chart for just a second. Now, remember, when you look at this, I think Rachel, if Rachel has ever done one thing where she said one word, probably there's two words she's probably said a lot: bull flag, and the second word would be cup. Okay. On this chart, it kind of looks cup-like. Now, when you take a look at this and go back to a weekly chart, pull this up 3-year weekly, it kind of looks like it's kind of in the top end of this maybe longer-term consolidation. Kind of has like a classic V pattern on the top, but it's been one of the stocks that's actually had quite strong relative strength. Now, we cannot assume that, oh, it's liquid, it's Dell. We don't know that. Don't know until we look. So first off, what's the option we have now? It's a 17th April. That 17th April is right here. Now, if we look at that just real quick, then we saw this last week, that we look at the 17th April, the 145, there it is, there it is. Double check the stock, that'd be helpful. Okay, 145, and now if we actually come down to this 145, what do we got? Yeah, spreads are still a little wide. We saw this last week and the week before that. Now, if you take a look at this, if we said, look, this is still enough days to try to sell something, we're not going farther out in time. We're just going up in strike. The strike that we actually have now is the 145. We're trying to sell a strike higher. What strike are we going to sell? As Bill would say, rinse and repeat. Which options are more liquid? Well, this one, 160, okay, 155, 150. Looks like the ones that are every $5, those are the ones that are kind of more liquid. Now, let's say that I said to you, look, I want to be a little bit more conservative. I think the market's going to be a little bit more volatile. Okay. Well, we might decide to pick a strike lower than the current stock price, farther away from where we are now, and the probability of actually closing below that strike price by a penny is 27% as of right now. Now, that probability is then going to influence the premium. So if I click on now that, let's say, if I say, look, we're going to sell the 150, okay? So this bottom row is, that's the one we're buying back. Second, we're going to sell the 150, and the whole, the comment is, hey, consider rolling if you could do so for a credit. Well, we can, and that's what we're going to do. So trade number one, now remember, if we didn't have this Dell 145 now, we would just be selling the put by itself. How do you sell the put by itself? Just click on the bid, click on the option strike that you want to sell, click on the bid, and that creates a single option order. Now, what I'm going to do is go confirm and send, and now what you're going to see in this case is send the order. Okay. Now, so that's number one. Dell is actually something we're going to keep an eye on because why? Well, because the trend's actually, it's been one of the stronger stocks. If you're someone that likes to track volume, that volume yesterday was slightly noticeable as it poked us in the eye. Okay. Now, let's actually go back to kind of something else just real quick. Let's go back to, remember we talked about the transports. Okay. Now, I don't know about you, but a lot of people like a good old vacation, right? I mean, give me a vacation, okay? Now, we know that what's been happening with the flights, the airports, some travel restriction, whatever, right? Now, and also the price of jet fuel, okay? Now, remember, that's been, a lot of that, if not all, it's been factored into the stock already. They already know that, okay? Now, here's the deal. If you look at, let's say, Delta, which one? Now, why does this have minus 100, sell 100, the stop? Because we have a position on that already. Now, what you're now going to notice is really on Delta is it's trying to poke its way inside that old channel. The bottom of the channel before was 66. Top of the channel was 72. Now, what I'd like to do here, you got earnings coming up. Now, for many traders or investors, they like earnings coming up. It gives something, maybe a reason for investors to try to put on trades. It's almost like, hey, there's a sale at the store, and there's a time frame, and that coupon is going to expire if you don't hurry and come in and spend money. Now, it's similar to with, let's say, trading. You got earnings coming up, and then people want to maybe speculate, invest, whatever you want to call it, on what they think that stock's going to do. okay, and what those earnings could be. Now, trade number one, we're going to go both. Number one, we're going to go Delta, short put, and also United Airlines. So now this doesn't need to take that long. Now, by the way, when we come to this, most of the stocks that we've been seeing as of lately, the MACDs have not been up. Why? Because there hasn't been bullish momentum. Okay? So this has been one of the few stocks where the MACD is actually high. It's actually above the zero line. Okay? Now, if we also come down and say, well, let's bring up that RSI. Okay? Now, the RSI is probably the number one tool for some investors really gauging the sell-off or the buying pressure, oversold, overbought conditions relative to itself. Okay? Now, what I'm going to do is if I click on this, it's going to give us, in this case, and let me take off that volume, I'll hide it. You're now going to see that it's the RSI over 14 days, that's the default. 70 is the overbought, 30 is the oversold. And now if I click on apply, we're now going to see that down here at below. Now, this is what happens, right? When the RSI is low, and if it's up higher now, we make comments like, geez, I wish I could have done it before, whatever. Now, these portfolios, they're mainly long only. They're looking for those sell-offs on purpose, and they're trying to buy into that weakness or sell something that's bullish in nature. So the idea on this trade is that could it try to go inside that old channel and then, for example, get up to the top of the channel or near there. Now, what I'm going to do is I'm going to go to the trade tab. We have Delta. That's always a good thing to verify, okay? When we look at this, we got 25 days to expiration, and this is the tighter bid-ask spread that we've seen in probably 2 weeks. You got 20 cents there, not as wide. And really what you're going to see is you got 62.5s and you got 65. If someone sells the 65s, what are they saying? They don't mind to buy the shares at 65 from now until expiration, not just the expiration, now. But the biggest actually thing is what we're going to do is we're going to left click on that. And then what I'm going to do is I'm going to say single order, we can leave that there. And we're going to move that to 340. So this is a way that we're trying to be bullish. We're not buying the shares, at least not right now. We have the obligation to buy those shares, okay? And now what you're going to see in this case, we're going to go confirm and send. And what you're now going to see is the strike, the premium, break even at expiration. And now what you see is there's the commission for the one contract. Now, let's say, for example, that they just get some ships through that Strait of Hormuz. Just some, okay? Well, what do you think oil is going to do? Go up? Maybe, okay? But I think there's some people that think maybe that oil pressure comes down a little bit. I'm not saying it's coming down to where it was before, okay? I'm just saying maybe it comes down some, okay? If it comes down some, jet fuel maybe comes down a little bit, maybe. And then what does that maybe do to some of those inverse oil type trades? So trade number one, here, you got Delta, okay? So what we got here, Delta, that one. And let me just, we're going to do this one fast. Don't need to talk about it because it's the same idea. But if I go look at, let's say, UAL, notice it's kind of getting inside. Now, let's zoom back. Now, sometimes what can happen is when you have these channel type trades, sometimes these stocks will get below the channel, and it could be on news that's legit, like if it's for real, okay? It could also be news that's just kind of exacerbated, that just keeps going on and on and on, like it has been lately. And you can actually get some snapback rallies. Now, I know what you're thinking. I wish it would go up to 110. Well, I mean, maybe that'd be nice. But wonder if it only came up to the midsection of this. What percentage upside is that? Could there be 6, 8, 10% there? If it could even do that. Now, when we actually go look on the bottom just real quick, again, a lot of stocks. Now, just because you look at the RSI and it touches the oversold, it doesn't mean that that is the blasted bottom, but it might be close. It doesn't mean if someone says, look, I got in when it hit the oversold, it doesn't mean that it nailed, if you actually, well, the first time it did it was right there. this is a very bad example, because if someone said I bought when it was oversold, that was pretty much the bottom. So just forget everything I just said on this example. I'm joking, of course, but sometimes it's going to be close. I wouldn't expect that it's going to be perfect. I'd expect that it might get you in that area, but notice at the bottoms, they're kind of choppy. The price action is moving around a lot. Forgive me for this bad example. Now, listen, what we got here is now we see the price poking, okay? When I mean poking, the stock is actually poking to a shorter term higher high. Moving averages crossed. For the love of Pete, can we get the MACD to stay above zero? Remember, if that MACD stays above zero, you're most likely in flag-like conditions. Higher high, higher low, higher high, higher low. And if you can actually stay above that zero line on the MACD, that probably means you have, let's say, 1, 2, 3 day pullbacks in the stock, red candles, and it's probably flagging. Okay. Now, if the opposite, if you can't get above the zero line, you're probably bear flagging. Okay. Now, if you take a look at this, what we're going to do is just real quick, go to the trade tab. Which ones are liquid? Well, first off, I'm going to go to the open interest column. The only one, you got 92.5 and you got 90. Well, so if we go look at, let's say, doing something that's kind of more in that range of what we normally talk about, let's say the 85-ish, and I'm just looking to see where there's more open interest. That's the number of contracts open and unexercised. If we looked at, let's say, something more conservative, well, 85. Now, if we sold the 85, now, by the way, how many of you want to be conservative right now? Now, that doesn't mean it's right, okay? How many of you want to kind of be a little bit more aggressive? And when I mean a little bit more aggressive, you're saying, I want to sell a strike close to the current stock price. Well, if we sell the 90, if you said, I want to be more aggressive, I want to try to sell thinking the stock might go up in the short term. And this trade starts out with a bigger premium, lower break even, and I might not have to roll as quickly perhaps because, well, there's a bigger premium to start with. Now, you got to remember, if you sell a put, it is a bullish strategy. It's the obligation to buy the shares at the strike price, okay, from now to expiration. You have an obligation to buy at 90, collect a 440 premium. That doesn't mean you made it. That means you collected it. You haven't realized it yet. We're going to go confirm and send. There's the layout. Notice the commission there, okay? Now, if we take a look at this, okay? Now, Andy actually says, should an investor be in more than, and you're saying airline stock, okay? I think if an investor was probably in more than 3 stocks in the same industry group, I mean, you got to be really careful at that point, okay? Because let's imagine, Andy, you said, well, in my portfolio, I normally have 12 or 15 positions, and 3 of those are in the same industry group, okay? So, I mean, let's say they have 12 or 15 positions. 3 of them are in banking stocks. 3 of them are in airline stocks. That's some concentration, right? Concentration meaning that you have a lot of your capital in the same narrow area. Now, if it goes up, you feel like you're a genius. I think we've all been there, okay? Feels very nice. I'm just saying for you, it felt nice. Now, what I'm going to go ahead and do is set. Now, by the way, if we said, well, how many positions are in the paid money portfolio? The answer is we have UAL and Delta. Now, UAL and Delta is somewhat like being short crude oil to some degree. There's some inverse correlation there. Now, let me kind of also see just real quick is, now the comment really is, are you okay trading over earnings? Well, it kind of goes back to, what do you think those earnings are going to really be? Now, if you take a look at, let's say, the 21st, you have Vivian, you have about a month to see if this can actually reach any upside potential. Now, remember, we always kind of say if you can get 50% in 10 trading days, that's a really good return. You get 65% with more than 20 days remaining to expiration, that's still a really good return. If you can get 80% ever, That's a really good return without holding on to expiration. So, Vivian, I think there's some time here. Got about almost a month. Okay. Now, if we also went back to just real quick another stock, and I want to go back to, I want to flash just real quick 3 stocks. Okay. Let's kind of talk about where maybe this, I'm going to call it a bullish trap. Okay. So a bullish trap is where that stock, oh, look, it's low. And it kind of sucks those bullish investors in. It almost teases them to get in. But I think there's some red tape on this example. Now, when you look at GLW, you're thinking, oh, yeah, we pull back off the top. Now this is what we're talking about. Now, one of the kind of booby traps, if you will, is we came down and we created a very narrow sideways range. What does that mean? Why is that a booby trap? Well, it really means that you came down, but there wasn't a whole lot of people buying to knock that price back up and then make a short-term high. So that's not good, okay? The fact that you can drop down on the price and you can't get that price to bounce up, that's a concern. The other thing that we actually see is on the MACD is that we're not even above the zero line. We've been 2 weeks where we can't even get above the zero line as the price is actually falling down. And the other thing actually, when we look at the RSI, third booby trap, is we do not see that RSI increasing. So when you look at the RSI, we're looking at where the price is closing relative to the highs or lows over time. Time being 14 days. And what you're now going to notice is when we look at this RSI, we're not closing closer to the highs. If it is, it's not consistent. And now when you look up at the price, you can now make sense of, yeah, we've been going flat. I call these type trades or these type of trends bear flats. They're more like hockey sticks, if you will. Normally, if something actually falls down, you get a bounce. Well, here you go down and it just went sideways. And that's what I'm kind of saying. Price falls, and you didn't, just because the price fell, you did not see new buyers or buyers come in to push the price up. Be very careful of charts like that, okay? Now, I think I want to kind of point that out. So number one is booby trap number one, sideways price action. Very narrow. Third booby trap, MACD's not even above zero. Third booby trap, you're going to see the RSI has gone absolutely nowhere, okay? It's not improving. So do not get, I think you got to tell yourself here, price is not, just because the price went lower doesn't mean there's real value there, okay? Can be a class unto itself. Now, the other one that I'd also say that is in that camp, and the reason I'm pointing these out is because in our market, you're seeing a number of these. Same idea here. Generac. Price pulls back, right? MACD's not even above zero. And that RSI is still, for the most part, drifting lower. That's probably not the bullish reversal that you're probably looking for, okay? I'm going to show you something that showed different. Now, if I looked at the last one, the JCI, same thing. This one, maybe, okay? Still seeing that same thing. Very narrow band, MACD. This actually did get above zero, barely, okay? But that RSI really not reversing. So I want you to flag GLW, GNRC, JCI, and really be aware of kind of like what are those, like it looks like a bullish bounce, but which ones might be a trap? In other words, you get into it, and then all of a sudden you don't get enough bulls buying only to see the price maybe even go flat further or even drop through the floor even more. Now, I want to come back to just real quick, maybe one that kind of showed something different. Example given was, let's say, a stock like MS, and I want to piggyback on the comments I just made. Example given is Morgan Stanley. The price falls down, right? And that price really fell down to that longer term horizontal support areas. What are the differences? Well, number one is you didn't really get that neutralist price range. You didn't see that. Not like GLW, Corning, Generac, JCI. You didn't see that. Second, you also saw the MACD 4 days ago, really actually some of the highest levels we've seen in a couple months, especially in the last 2 trading days. And you saw really the RSI, it wasn't just flatlining. It actually broke to a brand new high. And over the last couple of days, at least last 2-3 days, that RSI line was really trending higher. So I want you to compare and contrast those. What's the difference between Morgan Stanley and then you compare it to the 3 stocks, okay? Now, I want to kind of bring also up, let's go to just real quick a couple other stocks. But I wanted to say that because when you look through a number of positions, just because the price fell, that doesn't mean it's probably a good category of a bounce. If it's doing what those 3 stocks did, those are probably ones we would say, no, thank you. Now, I'm going to pull, now one of the stocks we talked about last week was AMAT a little bit. Let's just kind of double check this, okay? So we talked about last week kind of being a diagonal support bounce, looking for the price to fall down to support. Now, one of the bad things is if you don't get the market going up, maybe the up move is a little sedated, meaning it just doesn't go up as much if the index or the sector was going up. Now, when you kind of look at, let's say, the MACD, it's at least gone above 0. It's better than the 3 examples that we talked about. When you look at the RSI, that relative strength to itself, if you will, sentiment, it's actually closing higher, okay, relative to the high over the last 14 days, over time, better. Now, we have the example on this. I want to go to one more example that might be in the same space. Now, if we looked at AMAT and said, well, I don't even know what they do. So we have that example already. It's in the tech space, and you're going to see that it does semiconductors, okay? Now, the one that I'm going to look at, let's just kind of see if we're talking about the same area, Akamai technology, and you're going to see, do they actually do semiconductors? Well, security, cloud, right? When we talk about do they do semiconductors, if they do, it's not right up top. Maybe looks a little different, security and cloud. Now, if we pull this up just real quick to see if could there be an example on this, now let's go back to something just real quick. Let's go back to where we were right there, okay? And I'm piggybacking on what we just talked about. Well, what you're now going to notice is if you looked at Akamai, when you're going through, let's say, a pullback, okay, you're trying to evaluate, are there people really starting to buy or are they a trap? Well, if you go back to look at Akamai, it dropped down and there were some people that bought. It dropped back down. It did not make a lower low. That's positive, right? Then it actually went up again, made a short-term high on the 5th, and when it fell back down, it did not go down to make a lower low. That's a positive. In other words, the bullish investors are holding that trend line. That trend line is the trust line, meaning they'll probably buy, maybe, if the price stays greater than or equal to that trend line. Now, we look at on the bottom, you're going to kind of notice that same theme that we're talking about, right? Where the MACD is down. But you're going to see the MACD is shallower. Whether you look at the MACD, whether you look at, let's say, the RSI, very similar in nature, and we're actually using the 613.9, where it's a sensitive setting on purpose. Well, remember, if all of a sudden we start breaking out of this little short-term top, 1 touch, 2 touch, 3 touch, okay? Now, if we break out of that, that would be a short-term higher high. Price staying greater or equal to the trend line. The MACD kind of rotating up a little bit. Hasn't gone green, but let's kind of see day by day. Now, when you pull this up, what you're now going to see is first day we went green, maybe got lucky. And now if we take a look at this, we actually see the second day. Now, on the RSI itself, again, I want to kind of explain what I really mean by, what do you mean by closing high relative to the top of the range, if you will. Well, let's pull this up to just go style. Let's go to candle. Let's go back to bar chart. Everything goes back to a bar chart, okay? Now, what you're now going to notice is if we start getting, let's say, let me kind of just show, I'll label 1, 2, 3, okay? And remember, the vertical line is telling us the range, the low to high, okay? And that right there is the close, and this right here is the open. On that C, if we're closing closer to that high, that RSI should be increasing. That's what it's showing. Again, vertical line, there's the range, okay? Left-hand side, where do we open? Right-hand side, where do we close? What do the bulls want? We know what we want. You want the closing price as close to the high as humanly possible, or at the high. Now, if it does that, where do you think the MACD is going to go in the RSI? It should be going up. Now, if you take a look at this, same thing. There's the range again, okay? On the left-hand side, where did the price open? Where did it close? Now, this one is not as high. We closed somewhat off the high. Maybe Bill sold a position. Who knows? Maybe he'll tell us. Now, if you take a look at this, all three of those, if you think about this like a tug of war, did the bulls win or the bears win? Well, if the bulls win, if we're closing closer to the high over a period of days, and the bears win if we're closing closer to the lows of the range. Every day is a tug of war, okay? Now, if you look at this, if we go forward to the very next day, you're now going to see what he got. Well, this is neutral. Kind of more bears won that day, close closer to the low. Does it cause the MACD to change completely or the RSI? No, because the MACD and the RSI are not a one-day indicator. It's a smoothing effect. 6 days, 14 days. That's why we're not looking for a one-day indicator. One-day indicator is price. If we go back to the very next day, somewhat bullish, okay? Go forward to the very next day, bears won again, but it's not a one-day indicator. It's about, when you look at a period of, let's say, a couple of days, who's really winning more? And for the most part, predominantly, not saying the bears don't win sometimes, the bulls have been winning more. Last couple of days, closing closer to the high, kind of like a tie, if you will. And then today, what you're going to see in this case, so far, if we close here, we'd be closing closer to the high. I bring this up because I think when people look at the MACD or the RSI or stochastics, they really don't know maybe really what it's showing. It's going back to the basics of bar charts. Where are you closing or trading relative to the high or low? And if over a period of days we're actually staying close to the highs or low highs, MACD up, RSI, stochastics up. Vice versa, if it was actually closing or trading closer to the low. Now, I'm out of my time here today, but if we just looked at, let's say, one position, we're going to actually also take this back to just real quick, if I can. Now, as far as a homework assignment, I want you to also look for some stocks that might be showing signs of traps. That neutralist price range, MACD not going really above the zero line, and the RSI really not getting out of that sideways range. I want you to look at that and be very careful of those positions, because just because the price is low doesn't mean it's probably a bullish bounce candidate. Okay. Now, James, have you ever bought those? Yes. Okay. Was it fun? No, it wasn't fun. Okay. Usually what happens is it just flatlines. And if the market goes up, sometimes you just feel like you bought the duds, not the studs. Okay. We've all been there. Keep an eye on those. Okay. Now, the big thing is here, if we go back, I'm going to set up a stock position on Akamai, trying to get a bullish bounce here to see if we can't get that continuation. Now, we got Cameron May coming up next. Stay tuned for that session. Also, we got Rachel teaching later on this afternoon. Join her as well. And also, if you have not subscribed to the Trader Talks channel right on YouTube, make sure you do that. Playlist for this class right here, okay? Also, that page right to our YouTube page right here. Bookmark it. And there you go. So stay tuned for Cameron May coming up next. And thank you so much for your comments and your participation here. Go out and actually do your homework and also evaluate some of the positions you're looking for in bounces. Are they showing stronger signs or weaker signs? With that said, all investing involves risk. And also remember that with what we discussed, it was done for example, illustrative purposes only. This has been the class on trading with technical indicators. Cameron May is up next. Take care. Bye-bye.